Hey, it's Nolan Mathias from Mortgage 360 with the mortgage update for July 13th, 2020. Today, we're going to talk three things: the new business for self programs that are coming available to us, the proper way to write a price reduction in your financing condition period if you have found something wrong in a home inspection or need a price reduction, and how to properly structure that. And then, of course, interest rates and the current interest rate environment, which I think you're going to find interesting because there's still some room for us to move on interest rates. But before we get into that, do me that favor, hit the subscribe button, hit that like button, and hit the notification bell. Doing all three of those things obviously helps this channel grow, and it helps get this information out to as many people as possible. So let's get into it. Let's talk about business for self programs. A couple lenders this week introducing brand new business for self programs that typically in the past couple of years you would have to pay a rate premium for. And for whatever reason, there's clearly some opportunity in this market, and different lenders are looking at it now and saying, okay, we want to be in that business for self game, basically looking at people who have either brand new businesses or businesses that have been established for 2 years, and giving them the opportunity to, again, purchase both with mortgage insurance, so with less than 20% down, and with more than 20% down, while also being able to state their income. Now, the stating obviously needs to be within reason for the industry and the profession, but it's giving a little bit more latitude again for those business for self borrowers, which I think is absolutely amazing. And the great thing is no premiums on the business for self program. So in other words, you'd pay the same rates that a typical first time home buyer or typical buyer with verifiable income would pay. So absolutely great news for business for self borrowers and people who own small businesses. So absolutely amazing news on that front this week. And then with respect to one thing we're seeing in the market right now, that is the tendency for there to be price reductions after somebody's written a offer. So, typically what happens for those who aren't in the real estate world is you write an offer, you have, let's say, a 10-day financing condition to get your financing in order. And then you also have typically a home inspection condition where you are allowed to have a home inspector go in, inspect the property, make sure there's nothing wrong with it. And what we're finding is that home inspection is often being used now as a means of finding things to get a lower price. So in other words, finding things that are wrong with the property so that you can go back to the seller and say, hey, Mr. Seller, there's this, and this wrong. We weren't aware of that when we wrote the offer, so now we want a lower price. And typically, if the price reduction that you negotiate with the seller is less than about $1,500, it's no problem. We send it into the lender and we say, here's the issues. Here's what they've negotiated, $1,500 change in price. And they go, sure, no problem. We'll just adjust everything. Now, as soon as the price reduction becomes more than about $1,500, then what happens is the lender goes, okay, well, hold on a second. If it's more than $1,500, there could be something wrong with the property. So we want to know exactly what the issue is. And what they will do is they'll make sure that, if it's something major, that it's either taken care of before the buyer takes possession of the property, or they'll add it in as a purchase plus improvements to make sure that that thing gets taken care of. Because the last thing the lender wants is a buyer buying a home that has a major issue with it, gets maybe a deal, but is something that down the road would affect the bank's security or the lender's security. So if it's over $1,500, they want to see what the issue is, and then they want to make sure that if it's something that is important, that it's fixed. Now, here's the thing with that. Is let's say you go and you negotiate the price reduction right on your financing condition date, and you waive your financing condition because you've already got the mortgage approved based on the original purchase price. But now you're waiving your financing condition because you've got that approval, but you're making a $5,000 change in the price. Well, what you should probably be doing is extending your financing condition or writing a condition subject to lender approval for that price reduction to make sure that the lender's actually going to want to do the deal once that price reduction is in place. Because the lender still has the right up until closing to say no to actually approving that mortgage. And if there's something drastically wrong with the property, like let's say it's got asbestos, or let's say it's got some sort of sewer issue or something like that, they may not want to lend on the property. So it's important that when you do a price reduction over about $1,500, you give the bank the opportunity to say, yes, we're okay with that before you actually waive your financing condition. So something for the realtors who are watching this, make sure that if you're doing a major price reduction, that you're getting that leeway so that you've got the ability to get the lender to say okay. And if you're a buyer, also make sure that you are able to have the lender have that leeway so that you can make sure that they'll still lend on the property. So really important, something that we're seeing quite commonly now, and something that doesn't really get discussed, but could be very, very important over the long run, because we have seen clients in the past where they've gotten caught in this scenario where there's an issue with the roof, and all of a sudden the lender's like, no, we don't want it, and then we have to go and struggle to find a new lender who will actually do the property. So make sure you're clear on that when you're doing a price reduction after you've written an offer. Now let's talk about interest rates, because this is the interesting part. Right now, last week we were at about 2.34 on interest rates. As of this week, a standard 5-year fixed, all the features, low penalty, our favorite mortgage in the industry is priced at 2.14. So interest rates have dropped pretty substantially over the last week. And you can still get a 5-year fixed, fully discounted mortgage. Now, you got to be careful with the discounted mortgages. We say that every week, but you can get that at about 1.99%. And you get a fully discounted variable at prime minus 70 right now, which is absolutely crazy. I mean, that's 1.75%. But again, when you're getting a variable rate, you got to make sure that you understand what goes along with that discounted mortgage, and that you may not be able to refinance. You may not be able to switch to a different lender, which means if you go to lock it in, you have to pretty much pay whatever that lender that you're with has told you that the rate is. So be careful with that, but know that those rates are extremely good. And 1.95% right now on a variable rate is not uncommon for an insured borrower. So absolutely great rates. The one that I really thought was interesting was rental properties. 5-year fixed right now we can get for 2.54 or 2.35 on a variable, which is absolutely amazing as well, to be able to purchase a revenue property with a 5-year mortgage at around 2.5% in an environment where condo prices and rental type properties are selling for a discount is a pretty damn good deal. So if you're in that investment market like we are, make sure that you're taking advantage of the low rates and that you're looking at what's available right now, because there's some really good deals out there. Last but not least, what's really interesting to me from a rate perspective is, the banks and different lenders will say that the spread between the bond yield and the 5-year fixed rate typically runs at 160 to 180 basis points, which is 1.6 or 1.8%. Now, I disagree with that, because in my career, it's always run between about 1.2 and 1.5. But let me put that in perspective for you right now. Current bond market yield, 5-year bond market yield, is 0.39%, which means that if we're pricing at the high end of the range for where I've seen the spreads be, it means that mortgages should be priced right now at about 1.89%. They're priced at 2.14. So what that tells me is that the lenders and the banks have some room on their cost of funds to be more aggressive, and we could see even lower rates as the market gets more competitive here in the next little bit. So, 2.14, don't shake your head at that. That's still a great rate, but be aware that if you are in the market for a property or in the market for a mortgage right now, there's a good chance that rates could go down between right now and whenever you're closing, whether it's a month, 2 or 3 months down the road. So make sure that your broker, your lender is on top of that. Anyways, that's the mortgage update for July 13th. I hope you enjoyed it. If you did, hit that like button, hit the subscribe button, hit that notification bell, and we'll see you here next week. Same time, same place. Look forward to seeing you. Cheers.